We have been talking about this Elon Musk story, the X plan that you've been reporting. Tell me about what they might have in terms of ambitions in financial services.
So Elon has been very public about his idea of X as the super app, the everything app. It's hard to imagine any app that really does everything for you that doesn't have a major financial component, if you look at sort of where this model works around the world, and we can talk more about that. But look, they had a request for proposals out this spring to big financial data providers, saying we want to make the remember the cash tag, right?
Yeah,
dollar
sure.
sign, Meta, you get a, right? I remember when I was an M&A reporter at the Wall Street Journal, you'd break an M&A story, then you do cash tag to see where the stock was. But they have real ambitions to make this sort of a wraparound trading product. They had an effort this spring, which as far as I can tell, never launched, with eToro, which is a Robinhood competitor, to kind of funnel, to refer some trading business over there. This feels like a bit of a redo to me.
Now, I'm trying to get my head around it. I mean, first of all, it makes sense perhaps to create more engagement because financial Twitter is, pretty high volume. They're plugged in all day. But to be an actual provider of financial services and what it means for regulation and whether you actually want a trading platform, and there's zero commissions anyway, so it's not really that lucrative. I wonder what that really means.
I'm skeptical of this whole thing. I find it a bit of a head scratcher. To your point, there's not a lot of money in it. But even if there was, there was a moment where sort of there was a real social component to finance. I think maybe mid to late 2010s, you started to see Twitter feeds integrated to things like the Bloomberg terminal, right? And there were sentiment companies that would see, try to forecast earnings based on what people were tweeting. Mm-hmm. That moment feels over to me in a way that the broader social web has kind of died. Yeah. A pretty quick death. So I don't know. Maybe there's enough juice left in that meme stock rag. And honestly, if anyone can squeeze it out, it is Elon Musk.
Yeah, I guess you would think so. Although it's also, as with everything, there's so many layers to this because the CEO of this company was sanctioned for statements he made about his own company's stock on Twitter.
He's a problematic person in the eyes of financial regulators. But the other piece of this too is, you look at the super apps that have worked. You've got WeChat, Grab in Asia, GoZem in Africa. These are places where there hasn't been this robust domestic finance system. And so these apps kind of got to skip the part that's hard, which is taking all these consumers and retraining them and, disrupting bank apps, which for as much as people complain are pretty good, and the credit card and debit rails, which are pretty entrenched. So I don't know that it works here, honestly, or that we need one.
Do we need one? What problem is this trying to solve?
It's a bit of a solution in search of a problem, I think.
Financially speaking, as someone who's gone from being very excited about Twitter's prospects to now having a headache about whatever's going on with X, what's at stake for Musk's sort of business empire? Just kind of remind us, where was he? I know there were a lot of shares that had been pledged, obviously, as collateral over the years. He's probably still way underwater on the Twitter valuation that he bought it for. If it is kind of static and they can't figure out the super app and they can't figure where does that leave him?
Yeah, I think the concern is that first of all, they don't have a lot of money. I think the last time Musk spoke publicly about this, said they were still cash flow negative. Advertising was way down. This was before the arrival of the new CEO, who is obviously an advertising executive. There's some public comps. Fidelity, for example, owns some private stock in Twitter. They have to publicly disclose what they're valuing at. They just marked it up a bit in June, but it's still down more than half, I think, from the acquisition in October. So, look, you have equity that's underwater. You have debt, by the way, that as far as I know, the banks have never been able to place. That buyout debt is still sitting.
So they hold it.
They hold it.
On their books.
Yeah, I think if they had started selling it, we would have heard. And so I can't imagine what that's marked at. But if you've got the equity value of this thing at, let's say, $10 billion instead of, maybe 20 instead of 40, you're very close to being underwater on $13 billion of debt. So, they really need cash flow in the door here. And I don't know that chasing sort of features on a super app is what gets it.
But it seemed so promising when they hired Linda Yaccarino as well. It was actually a strategic move to say, wow, okay, advertising is going to be the bread and butter. Look how well the other social companies have done. And then the next week he changes the name of the app. And I can't imagine that makes her life much easier right now.
And you can tell from her tweets that she's sort of chasing her boss, right? It doesn't look like incredibly sort of well rolled out corporate strategy. And so, I'll be very curious to see. I think advertisers have started to come back a little bit. You've seen some numbers. I'm sure you see it in your feed. The ads are slightly less garbagey.
Yeah.
Yeah. But, No, I mean, this is a company in real both strategic and financial trouble.
But it's also a good reminder that Twitter as a public company, it always seemed to punch below its weight in terms of revenue per user and advertiser demand, for just seeming like the nature of the content was not as conducive.
It was a great product that was a bad company, I think, was always the knock on Twitter. And, Jack Dorsey has said since then, it never should have been a company. It should have been a protocol. I don't entirely know what he means by that. But it never should have been put in this for-profit structure, because it could never quite make it work, right? It was incredibly valuable in these moments of peak news breaking. It actually probably belonged with in the Time Warner family with the CNN, the NBC family, where there's some tie-in to real-time information. And by the way, the request that went out to providers a couple weeks ago says Twitter is the real-time hub of society today. I don't know how true that is anymore.
Yeah. No, they certainly have been leaning on that self-identification. We'll see if it persists. I don't know. We were just talking, though, that nothing really seems to be replacing it, even if it's just sort of sapping interest in a lot of different platforms.
The only thing that Mark Zuckerberg may prevail after all, because, again, Threads but Instagram. I'm watching that as a place where it used to be much more like, hey, my friends are posting pictures, and now it's becoming much more content-rich, more businesses are on there. It's a better experience, so...
I think that's right. I mean, look, Threads had this huge opening day, so to speak, and, it's still there. A lot of people are on it, but I don't know. It doesn't feel like the Twitter killer, and maybe just nothing sort of fills that gap, and we all just go back to
fragments.
Exactly.
Pre-2007. No, I think, right, the internet really is starting to split apart.